This is the Martini Mortgage Podcast with Kevin Martini.
Hello and welcome to the Martini Mortgage Podcast. My name is Kevin Martini and I am the host of the Martini Mortgage Podcast. In addition, I am the branch manager and senior mortgage strategist of the Martini Mortgage Group at Benchmark Mortgage, which is located in the capital city of North Carolina, Raleigh. In this episode, I'm going to talk about credit, specifically about the credit scores. So let's dig on in. Your credit score will vary based on what type of company is pulling your credit. Now, I get it and I understand what you're thinking. Your credit is your credit. It makes sense if you're thinking this. However, sadly, that's not the way it works. It almost seems like when you're thinking about credit scores, you need to throw all common sense out the window. Those free websites that offer access to your credit scores and those websites where you pay for your credit scores are designed to only give you a perspective on your credit standing only. They are not the scores that a lender will receive. Hence, they are not the scores that a credit decision will be made on. Now, each type of lender will use a different type of credit score model. So there will be a different score if you are getting a car loan versus getting a credit card. There is a different credit score if you are getting a mortgage versus getting a loan for furniture. Each creditor industry will put a different weighted factor on your credit accounts, and that different weight will impact what your actual credit score is. Now, obviously, this is a mortgage podcast. So on this episode, we're going to be talking about credit score basics for the mortgage credit model. Now, as a primer, credit scores are designed to make a decision easier for lenders. However, the credit score is only one of 30 plus factors that determine what your home loan rate will be, and if you qualify for a home loan. Again, you heard me correctly. Credit score is just one of the many factors that determine if you're eligible to secure a mortgage, and it is not the only factor that is considered when getting a home loan. Here is a hashtag Kevin Martini Live talking point. I helped families with low credit scores. You see, credit in the mortgage arena goes from 350, which is pretty bad, to 850, which is top tier. Now, I've been in this financial services in the late 80s. I have never seen this unicorn called an 850 credit score. Now, I've helped families with a credit score at 580. I've helped families with a credit score of 840. And I help families all between. There's a couple of things that I want to highlight. Bad things happen to good people. And your credit score is not the only thing that I, as a mortgage strategist, consider. Now, I say yes to a mortgage for many people. However, I never say no. A mortgage strategist should never say no. I may say not now, and I will work with the family to get them buyer able. If you are ready and willing to buy a home, I and the entire Martini Mortgage Group will work hard to get you able. Now let me shift some gears here. In the mortgage world, there are 5 components to your credit score, and they are payment history, current debt, length of credit, type of credit, and new credit. Now, payment history represents 35% of your credit score. This kind of looks at, have you missed a payment? Have you defaulted on a loan? Are you current all the time? Current debt represents 30% of your credit score. So in other words, how much debt do you have? How much debt do you have to limit? It considers if you are a revolver, an installer, or a transactor. Length of credit represents 15% of your credit score. Do you have a long history of paying debt back, or are you new to the credit world with a limited experience? 10% is the new accounts and to your credit score. In other words, have you applied for numerous credit in the recent time period? Types of credit represents 10% of your credit score. Do you have a different type of credit? In other words, do you have different type like revolving, installment, mortgage, things of that nature? Your credit score is impacted directly by your payment history, your debt load, your length of credit, the new credit you have, and the types of credit you have. Now, obviously, 2/3 of the credit is decided by two factors: your payment history and your current debt. So keeping these two factors on the radar screen are important since they represent the largest component of your credit score. Now, I have been in the financial services since the late 80s, and for the record, I am a very young man. With that being said, I've helped thousands of families, and I have yet to find two families that have the same needs or wants, or even the same credit for that matter. Now, let me give you kind of an example. I had a family that paid 93% of their payments on time, and I had a family that paid 98% of their payments on time. The family that had paid only 93% of the time on time had better credit score than the other family that were late only 2% of the time. There is no question you want to pay on time 100% of the time. However, for some crazy reason you're late, you want to do everything you can to make this an isolated incident, because the longer distance between the late, the better the score is. Now, no one really knows this proprietary model that the three repositories use, and if we did, I'm sure that we would not understand the algorithm. Most industry experts believe that if you have a 70% or more of your credit limit is unused, that is a good thing. So for illustration only, if you have two credit cards, both have a limit of, say, $1,000, so $2,000 total limit, then you do not want to owe more than $600 on both of them. For the families I serve, I advise them to look at their credit 3 times a year to make sure there is no unauthorized accounts activity that has reared its ugly head. Yes, sadly, ID theft is a real thing. You see, the only source for free credit reports authorized by federal law is www.annualcreditreport.com. Under the law, you can get a free copy of your credit report every 12 months from each repository. Now, the only place I recommend the families I work to is to visit the website authorized by federal law. That website again is www.annualcreditreport.com. What I advise families I work with is to, at the beginning of the year, to go ahead and take a look at the Equifax. Then around springtime, take a look at Experian. And then late fall, check out your TransUnion. So you do not need to pay for the credit scores because they're irrelevant. What I would like for you to do is to ensure that the information on the credit report is accurate and make sure there's been no new accounts opened that you're unaware of. Again, ID theft is a real thing. In closing, I believe with all my heart that homeownership is on the path to wealth creation. I have firsthand confirmation that people do not explore their options of homeownership because they overestimate the money needed for down payment and they overestimate where their credit score needs to be. If you are thinking about buying a home for the first time or the fifth time, please know that the process is always the same. Loan first, then home. If you know someone that is thinking about buying a home, then call the Martini Mortgage Group at 919-238-4934. Let me share what you can expect. You can expect trusted advice from someone that has experience and a servant's heart. We understand it's not just a house, it's a home. Thank you for tuning in to the Martini Mortgage Podcast. And if you have questions about credit, the unique mortgage products we offer, or the current rate environment, we invite you to give us a call. Or visit our website, www.martinimortgagegroup.com. Thanks, and we'll talk to you next week.
The Martini Mortgage Group makes real estate dreams a reality with trusted advice in a stress-free environment with great rates and on-time closings while providing a world-class experience. If you or someone you know has questions about the current mortgage rates or the current mortgage programs, please reach out to the Martini Mortgage Group at 919-238-4934. The information contained in this podcast presentation is for general product information purposes only. Arklatex Financial Services, LLC, NMLS number 2143, doing business as Benchmark Mortgage, makes no representations or warranties of any kind expressed or implied about the completeness, reliability, suitability, or availability with respect to the information, products, or services. All loans subject to borrower qualifying. Other restrictions may apply. Branch Manager Kevin Martini, NMLS number 143962. Branch located at 5650 Six Forks Road, Suite 101, Raleigh, North Carolina, 27609. Contact the branch by calling 919-238-4934. Equal housing opportunity.